One of these ETFs pays a big dividend and has a massive amount of dividend growth potential. The other one of these ETFs doesn't pay necessarily as big of a dividend in the start, but has much more potential to grow long term in my opinion. Now, out of SCHD or VOO, the question remains which of these ETFs are better to invest into long term, and when it comes down to it, which of these two ETFs will make you more rich? Well, in this video I have the answer to both these things, so stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, first off, to back up for a second, this is a question I see all the time, especially from newer dividend focused investors or just investors that are a little bit younger and have a long time from ahead of them. A lot of investors, especially conservative investors that want to see their money grow slow and steady long term, at some point are most likely going to come across SCHD or the Schwab US Dividend Equity ETF, and of course, Old Faithful, VOO, the Vanguard S&P 500 ETF. Now, before we go through and see which of these ETFs would in theory make you richer long term, let's go through each of these ETFs and see what they have to offer and exactly how each of these ETFs work. Now, first off, to start off with SCHD, this is my favorite of the two. This ETF's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, some highlights for SCHD: it says it's a straightforward low-cost fund, which it is quite low cost at just a 0.06% expense ratio, and the fund can serve as part of the core or complement in a diversified portfolio, and it tracks an index focused on the quality and sustainability of dividends. Now, the product summary for VOO, on the other hand, it says invest in stocks in the S&P 500 index representing 500 of the largest US companies. Goal is to closely track the index's return, which is considered the gauge of the overall US stock returns, offers high potential for investment growth, which is definitely what is done historically. Another very important aspect is the fact that VOO's expense ratio is 0.03%, so it does cost about half as much to hold on to, but again, no one's necessarily worried about that. Both of these ETFs are very, very cheap, at least relatively speaking. Now, first off, something to keep in mind when comparing SCHD to VOO is the fact that VOO has been trading a little bit longer, since around September 2010, SCHD since around October 2011. But on the max time frame, as far as price return goes, VOO is absolutely smoking SCHD, up around 403% on the max time frame, where SCHD is up around 223%. Now, keep in mind, this is not with dividends included. We're going to look at that here in a second. But on the last 5-year time frame, as far as price return goes, things are honestly a lot closer, where SCHD is up around 52%, VOO up around 86%. Now, as far as the holding breakdown goes, this is where these two ETFs are of course going to differ quite a bit. VOO has the biggest holdings in things like technology, financials, and healthcare, where SCHD has financials, healthcare, and consumer defenses as a top 3. Now, because VOO does have a lot more technology, and let's be real here, names like Microsoft, Apple, Nvidia, etc. have really exceeded expectations over the last year or two. This ETF has been growing like crazy, up around 23.7% on the 1-year time frame, just as far as price return goes. Now, SCHD, in my opinion, has some more tried and true boring names that don't necessarily grow as much, aren't going to offer as high of a beta. Names like Home Depot, Amgen, BlackRock, abbvie, Texas Instruments, names that are tried and true that have paid dividends consistently over time, but aren't necessarily going to rock your portfolio this way or that way. But that brings us into the next portion of comparing these two ETFs and trying to figure out which ETF is not only best for you potentially, but which ETF is going to make you richer. Now, SCHD's dividend yield is about 3 times that of VOO. VOO's offering a 1.28% trailing 12-month, where SCHD is offering almost a 3.5%. Now, even though VOO long-term, in my opinion, has much more potential to grow as far as price return goes, SCHD is going to pay you a ton more cash flow from day one, so if that's something you're looking for, and if that's something that's important to you specifically, SCHD is definitely going to be the front runner for that. Now, as far as dividend growth goes, or how much more in dividends each of these ETFs are paying historically, at least year over year, VOO has a 7.25% dividend growth rate on the 10-year, where SCHD has 11.01% on the 10-year. So not only are you going to get paid a lot more cash flow from day one by investing into SCHD rather than VOO, but you're also most likely going to get paid more and more long term. Now, for some investors that are looking to use some of their dividends, if not all their dividends, when it comes time to retire, or use some of their dividends for things like bills, SCHD, in my opinion, might be a better option, because not only is the ETF probably going to keep growing over time, but this ETF is going to pay you a lot more cash flow a lot sooner and pay you more and more year after year, at least it has done so historically. But at the same time, you cannot discount VOO's consistent dividends every quarter, And on top of that, the dividend growth rate has been very consistent. But at this point, there's really only one last thing to do. If we were to stack up SCHD next to VOO and look at the metric total return, or how much each of these ETFs have returned historically as far as price return goes and dividends included, if we were to have invested $10,000 into both VOO and SCHD, and this is around 12.74 years ago, with dividends reinvested along the years, an SCHD investment of $10,000 would be worth $46,800 plus today, or an average annual total return of around 12.89%, which is not too shabby whatsoever. But VOO comes out on top. Over the last 12.74 years, that $10,000 investment into VOO would have turned into $57,100 plus, or around 14.66% per year average. So at least going off of this time frame, 12.74 years, an investor would have been much better off investing into VOO, even though they're paid much more dividends over time with SCHD. The sheer power and growth of VOO, the basket of holdings that VOO tracks, is going to be nearly unstoppable, which is why it's been so hard to outperform the S&P 500, really no matter what you buy long term. Now, I will say that either way, earning a 12.8% or a 14.6% long term year over year is going to make pretty much any investor out there quite rich long term. And like I mentioned earlier, because of the fact that SCHD does pay a little bit more in dividends compared to VOO and does have some pretty significant dividend growth, that could be partially an argument on why SCHD could be a better investment for some investors out there. When it comes to VOO versus SCHD, if you could only purchase one of these ETFs and hold on to it forever, which one would it be and why? Let us know in the comments down below. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.